Shares of Nvidia slightly in the red. The company has been bouncing back this week after a volatile period. Nvidia did get hit with a downgrade this morning from New Street Research. Analysts at the firm saying they see limited further upside and are downgrading the stock from buy to neutral. Well, Brett, everybody's trying to be a hero on Nvidia. All I know is I go back to a recent JP Morgan story, and it is very simple. Demand continues to outstrip supply for Nvidia chips. And as long as that continues to happen, there might be some volatility in the name. How do you dump this stock? I mean, they're a beast. They're on a path to potentially $10 trillion market cap.
You know, it's not a stock particularly that's just one that you talk about where it's just, okay, yeah, just trade this name. No, it is an investment decision that has now been regarded as such for a long-term kind of hold type of mindset. It's not something that you're trying to day trade at this juncture, even though it got a little bit more affordable after the stock split that took place in a couple weeks back.
Last thing you want to hear. So you call up your money manager and they tell you, hey, I hope you had a great July 4th. Yeah, I'm going to be lightening the load on Nvidia. Who the hell wants to hear that? I mean, that is the great way to lose your job and lose client money. I mean, it's tough to sell a stock that everybody is rightfully very bearish on for strong fundamental reasons. Yeah. I mean, the AI chip rollout, this is not late 90s .com stuff with companies not making any money. This is real stuff, real technology, and this company continues to be the leader by years. I mean, by years, they're leading other companies.
Well, the interesting kind of annexation, or at least .com bubble analogy that Nvidia has been drawn to time and time again now is actually Cisco. And if you go back and take a look at their stock chart, one of the things that you'll see that is quite similar here is this hockey stick type run up during the .com era, and then it had to grow into its valuation. Now, of course, it declined precipitously in the aftermath of that bubble bursting, but then eventually over years was able to grow into that valuation because people could see the applications and the use cases for the technology that they were bringing to the market. It's the same thing with Nvidia here. We just don't have a 1 million chip data center right now because it's not built up yet. And so that's perhaps the next part of this generative AI trade. When we talk about picks and shovels, it might literally be picks and shovels building up some of these data centers, picks and shovels putting some of the electricity in the ground or overhead or however you're building that grid out in order to make sure those data centers have the necessary utility and power that they need.
No, right on, Brad. And I think you have to be thinking about it's not just the Nvidia trade, it's the whole ecosystem. You had a great conversation on my podcast, Opening Bid, cheap plug for myself there, with Brooke Dane, a portfolio manager at Goldman Sachs Asset Management. His, I think, view was, sure, you can continue to own Nvidia, but think about some of the companies that are trying to compete with the likes of Nvidia over the next 5 to 10 years. It's a Marvell, it's a KLA, it's a Micron. None of these companies are really going to take material market share from Nvidia today, but as long as they could sell that sizzle to investors, those stocks might rise along with Nvidia.
I listen to your podcast every time.
I appreciate that.
I mean, I sit right next to
you listen to it, so you don't download it. You don't download it.
I mean, look, I was in the pilot episode and then I never got invited back. I'm waiting to come back.
All right, well, you can come back anytime you want.
Okay, done deal. Tomorrow?
Yeah.
Sounds great.
Yeah.